So welcome officially to session number 16, week number 16 or episode number 16 of the 26 episodes. Today, Thursday, 21st April, 8:15. So let's begin today's session without much ado. As usual, all my presentations always begin with thanking the Lord Almighty who's given me much more than what I deserve. And when it comes to finance, there are no words less than thanking my dad. For describing it is indescribable what I can say, what he has taught me and what he has told me and what he made me learn all my life. Whatever I learn in finance is courtesy him. Of course, a little bit from my MBA finance, but majority from my dad. So this is my brief CV. I have a dual MBA in HR and finance from IGNO, apart from my other two MBAs in marketing and hospital management. So it gives me a little bit authority to speak over the topic. So today's topic is the hot topic, the trending topic of today, a few golden rules to invest in the stock market. It is basically like testing of the investing. So it all boils down to a few rules. Of course, the rules can be endless, but I've shortlisted them to 7 or 8 rules or 9 rules, which I'll be discussing today. So this is my topic, image taken from Economic Times, the bull and the bear, and of course the lure. So people believe that just investing in the stock market would require a hearsay from a few friends, advisors, and they can go about the task themselves. It's not that easy. Investing in the stock market requires a lot of patience, lot of discipline, lot of research, and of course, sound knowledge about the markets, about economy, and of course, understanding about the market volatility. सबसे ज़्यादा प्रॉब्लम है कि जो hearsay word है, that is not here in any of the 6 factors that I have listed: patience, discipline, and research on you, and knowledge about markets, economy, and the volatility part. So we all know, or we all believe that जब लो जाए खरीद लो, हाई जाए बेच दो. That is the most simple rule we have been following. But there are a few more rules than that. Of course, there is no sure shot formula because the market is not logic driven; it is sentiment driven. A bad news here and there, and the market will crash. A good news here and there, and the market will surge. There are no reasons, no definite criteria. Of course, good financials, good fundamentals of good stocks and shares are always the reasons. But let me tell you a few golden rules that are applicable in any kind of situation, in any kind of investment, whether in the stock market or in the mutual fund market. We all need to understand those things. So from where I started, the hearsay is banned. Hearsay is a banned word in the market. So never follow the herd mentality. The problem is most of us actually do the reverse. We follow it. मैंने उसमें शेयर ले लिए, मैंने उसमें ले लिए, बहुत बेनिफिट है, तू भी ले ले. किसी ने 90 में लिया था शेयर, आज 400 हो गया, उसने बोला यार मैंने लिया था 90 का 400 उसने जब जिसको बोला उसने 400 में लिया, उसके बाद शेयर 300 पे आ गया या 420 पे 415 पे चला गया. इससे मेरा गेन तो कुछ नहीं, उल्टा लॉस हो गया. अगर 300 गया 15-20 चला गया तो मेरे को कुछ खास गेन तो नहीं है. सो इट इज ऑल अबाउट सब्जेक्टिव सिचुएशन and your own analysis. So the only thing is that stocks should always be bought in good fundamentally strong areas. There are a lot of fundamentally strong you can say stocks like Asian Paints, Reliance, HDFC Twins, Bajaj Twins, Nestle, IRCTC, and the list goes on and on. Wipro, Infosys. There are too many good shares which are fundamentally strong, which need to be, you can say, kept in mind. But if we just go by the hearsay, मैंने एक वो penny stock में लगाया था या छोटे stock में लगाया था, वो मेरे को इतनी return दे गया, that may be a luck factor many of the times. There will be an odd trident which never moved from 17-18, now trading at 56 rupees. There will be those stories. There was and have been very great examples. Shares like Educomp 10 years back trading at 1600, today trading at 2 rupees. Yes Bank trading at 370 rupees, today trading at 13-14 rupees. Vodafone Idea trading at a good amount, now trading at 8, 10, 12, whatever rupees. So you cannot be actually sure about certain things when the stocks drop. They sometimes drop based on the results, based on the profits. But then on the flip side, there are examples like Zomato. which has never given a profit. Still, the IPO launched at 75, opening at 125 or 130, and going up to 150 also. Now coming back to, you can say, close to 80. So there will be such stories always. Overvalued shares like Paytm, target opening a, you can say, IPO set at 2000, targeted at 22, 2300 on opening at 1700 and going up to 500, 600 rupees. Now trading around 650, 700 or so. So these sort of things will happen. Companies which are not giving profit sometimes will open up strong. Companies like Nykaa के local भी brand कोई नहीं खरीदता है, but still one day it, you can say, a share opened up at such a huge premium, and the results for everyone to see. But then there, the fundamentally strong stocks which I mentioned, they'll keep on still, you can say, gaining over a period of time. I was reading about Reliance only. Reliance touched an all-time high. Reliance high was around 2749 or 59. It I think touched this price in January end or so, January 24, 25, around 24, 25th January. It touched 2759, and then it went down to 22, 23, trading around that. Yesterday it breached close to that price. Today it's reached a new high of 2789 before closing down at 2782. I was traveling today, but I was still following it whenever I had time in between. But now Morgan Stanley increased its bid to 20%. That we had a future of Reliance of 3200 in mind. And trust me, 1 year back, Reliance touched its, not 1 year, 1.5 year back, in the COVID year, August 2020 or September 2020, Reliance touched its lifetime best of 24,2500. After that, it came down and was trading for one long year, 17 to 1800. And today the share is close to 2800. And the future is pegged at 3200. It is a fundamentally strong company. It is India's biggest company. We know it, Reliance Industries has it. Now, Wipro Infosys, we saw on Monday bleeding. Of course, they're very stronghold shares. They gave a good opportunity to be bought over then. Infosys results came on Friday and the markets crashed. Monday and Tuesday, both days, it crashed. 800 points, 500 points, both days, BSC, you can say, sank down before recovering a bit on Wednesday and today, Thursday as well. So the good stocks, the bottom line is that the good stocks will still maintain its value. They'll be corrected. Of course, there will be a period of crest and troughs, but they will not be overtly affected by this thing, because sometimes there may be a sectoral dip. Sometimes there might be a, you can say, a drop in a particular sector. For example, banking sector saw a dip a quarter back. Then technology stocks, maybe power stocks may be dipping currently, maybe a little bit, or correcting maybe a little bit. So those sorts of dips and highs will keep on happening. It does not mean that you believe that the growth happens in a linear fashion. The growth always happens in crests and troughs. If a company like Reliance can touch 23 and then trade for the whole year at 17, 1800, and even in March, April 2020, when the markets crashed by 50%, Reliance also came down to 850 or 840. Today around 2800. So those sort of things will keep on happening. So Warren Buffett always has given wonderful quotes, and he says, we simply attempt to be fearful when others are greedy, and we have to be greedy when others are fearful. And this is the logic of the bull and the bear market. So people who don't know bull market or bear market, bull is a terminology used in market when there is a huge, you can say, surge in Sensex. You can say there is a lot of buying happening, Sensex is going plus. We call that as a bull market. When there is a lot of selling because of panic, because of fear, because of any bad news, Russia-Ukraine war, interest rate correction, inflation, a lot of things, then the market, there is a lot of selling, and so the Sensex goes down. That is known as a bear market. So those of you who don't know the basics, the best way to start is watch the web series on Sony Live. It came 2 years back, or maybe last year, I guess. Scam 1992, featuring Harshad Mehta. Of course, there is a movie also made, which is on Disney Hotstar, by the name of Big Bull. But Big Bull has a lot of things which has been manipulated from the original story. I'll suggest you to watch that web series on Scam 1992 on Sony Live. It will give you a good amount of idea how things used to work 30 years back or 25 years back. So be fearful when others are greedy. When everybody is buying, ye kharid lo, wo kharid lo, be fearful. But be greedy when others are fearful. When they are selling, be greedy, then buy it. So this rule has to be followed at all the times. So second rule is have a broad portfolio. Doesn't make sense if you keep on investing in one sector or so. Always never keep all your eggs in one basket. Diversification is the key to invest in stock market. So always have various asset classes, and does not mean only stocks. Can be mutual funds, can be gold, can be other things, so that your growth is never stunted. If you're relying on only one thing and that sector dips, then you are not growing. But if you have gold and stock market share an inverse relationship, stock market goes down, gold goes up. So if you are losing in stock market, you are gaining in gold. Ultimately, your results, or you can say your growth or your return over investment would be balanced out. हम लोग बोलते हैं स्टॉक मार्केट इतना गिरा, हमने तो जब खरीदा था तब उसके बाद गिरा ही गिरा, ऊपर बढ़ा ही नहीं. Over the last 30 years, stock markets have given a, you can say, a return of 12% every year, close to 12% every year. That would mean there would be years with double the growth, there would be years with zero growth. But on an average, 12% growth is there. But what does that mean? You need to be there when it was 24%, you need to be there when it was 0%, so that your average also comes out to 12%. Just giving you a very small example, just to correlate all these things. So remember that level of diversification will be dependent upon each individual's capacity. If you keep on only investing in stocks and no mutual funds, no PPF, no NPS, no gold, no other kind of instruments or no other asset classes, trust me, you are limiting your potential and risking also. Because if you are only in equity and the equity crashes, of course it will grow up sooner or later. But if you are impatient and you seeing your loss, you sell that off, so you are booking only losses. The rule number 3 says set realistic expectations. So Warren Buffett again said one quote: if you don't find a way to make money while you sleep, you will work until you die. He's talking of the word passive income here. And for him, the passive income is the compounding. Compounding gives you a sleeping income. When your own money starts earning almost the same investment, almost the same amount that you are investing every year, it starts giving you that amount back. Trust me, you're in the right space. That is when you can say your money is making you money. So whatever your interest is being generated, so if you reinvest that, that means you are not spending anything from your pocket to invest, and still your investment is being done. This is the way when your money starts making money. So be realistic. If you make unrealistic assumptions for high expectations from market, you may be in for a big trouble. As I said, patience and discipline to fir bhi chahiye na. So expecting good returns is not a bad thing, but over expecting is definitely bad. Over expecting, and that too in a short period of time. As I said, if you are having a long rope, you need to be present for both the times, the bull and the bear. So in the recent 1.5 year, there have been stocks which have given more than 3 or 4 times also. But on an average, every stock has given 50% returns. But does not mean that every time this will continue to happen. This will, markets touched their high in January or so, or maybe December. Nifty touched 18,600, its highest. BSE Sensex touched around 62,000, its highest till date. It's not been able to breach that mark in the past 4 months. There are periods of growth and you can say downfalls, but then they keep on happening. That is part of the cycle. Then the 4th rule is don't try to time the market. Time spent in the market is very important. As I said, somebody says, I got it at 90, now it is at 400. You bought at 400, now it comes to 300. That guy with 90 will still be in a profit, but you will be in a loss. Or then if it goes up to 415, 420, you'll say, hardly not even 5% growth is there. So he'll say, no, I had very growth because his benchmark is 90 from where he's measuring it. So there will be cycles. Markets have a cycle. There is a bull cycle, there is a bear cycle, there is a growth cycle, there is a replacement cycle. So it'll keep on happening, but it is impossible to predict for anyone. Only two people can time the market. Only two people can tell what is going to happen in future: God and the liar. So if you are not either of the two, you can't time the market. So better concentrate on spending the time in the market rather than timing them, because it will take 20 years to build a reputation and a portfolio. It holds good for dentistry also, for your portfolio also, and just 5 minutes to tune it. And if you think about that, you will do things differently. Then follow a disciplined approach is the fifth rule. Discipline goes a long way. You need to have an investment strategy and identify the stocks, not doing it on hearsay. Of course, there are fundamentally strong stocks. As I mentioned at the start, I gave you a whole list. You can pick any one from them, read about them, what are their growth potentials, what are their expansion plans, what is their future strategy. Everything is available in their balance sheet. Everything is available online. So if you find it good enough, lucrative enough, go for it. But allocate a percentage that I'm still, even if you're investing in fundamentally strong stocks, you need to have a strategy for it. Yes, I'll be investing my 20% of income in stocks, my 10% of investable income, not the overall income I'm talking. Let's suppose you are investing 1 lakh per month or 40,000 per month. You have this in mind that mera 10% target hai, out of that 40,000, I'll spend 10%, 4,000 in stocks every month. Whatever I'm doing, it is my choice. I have a risk appetite of 10% only. Fair enough. Go about that. Don't burn that 40,000 fully in stock. That is what my advice. Then always have that goal identification. ये मैंने stock लेके रख दिया, इसको मैंने 10 साल touch नहीं करना. Fine, no problem. If it is a fundamentally strong stock, keep it. Keep it for long. There are very, very less chances that after 10 years it will be in a loss. It will give you a lot growth in those 10 years. But then if you are intraday trader or you do short kind of trading, which I actually do not advise the dentists or the healthcare professionals, because trust me, it is very, very difficult to monitor these things every day. This was one of the conscious reasons I stopped. This was one of the strongest reasons I stopped trading consciously in 2018. I still do a little bit of selling of all the stocks given to me, inherited from my dad to me and my mom. I do keep on selling it, but I rarely buy it, anything. But then I have determined the targets. I determine those things when I have to exit or whatever I have to take out money. So trust your decision and never unfollow your strategies. And your pace, your time, your amount, your rules should be there. Nobody should be there to push you in that regard. There will be people, there will be advisors all over the place. You open up a demat account with a company like a Motilal Oswal, or you can say, and they keep on, I am your dedicated fund manager, I am dedicated your investment advisor, I'll keep on guiding you. Adani Green इतने में आ गया है, आज आप ले लीजिए. टाटा पावर इतने में आ गया है, तो 290 पे ट्रेड कर रहा था, 298 पे, up to 49 पे आ गया, अब आप इसको खरीद लीजिए. There will be people who will be giving you advice, but सुन लो उनकी advice, but trust your own instincts, follow your own brain. You need to have a knowledge about these things and not blindly invest on any investors. Then number 6 is monitoring your portfolio very, very constantly. We are living in fast changing times, and you can say any good news, bad news can adversely or positively or negatively affect the market. So you need to monitor. So if you can't monitor, take the help of a good financial advisor who can monitor your portfolio. That is one thing. So Warren Buffett again had a quote for it. The stock market is a device for transferring money from the impatient to the patient. Of course, he's not talking about the dental or the medical patient. He's talking about the attribute of patience in this. So people who are impatient, they transfer their money to the patient. They book losses and they book long-term profits in that regard. So number 7, invest only in the business you understand. You don't understand an iota of cryptocurrency, don't go in for it. It is a blockchain technology, we all know it, but don't go in for it. So For stocks, if you know the company, you've read about it, promoters, management, vision, financials, as I told you, their balance sheet, so everything should be available online. You can search for it and just not invest in a stock, invest in the business behind it. Because if you do not understand the company, my advice is don't invest even a single penny in it. That is what my one advice to you for today. Final advice for you, of course. Then number 8 is do not let emotions overpower you. It is very important that we control our emotions. वो welcome याद movie याद कर लेना. Uday control. Nana Patekar used to say Uday control. So emotions will always cloud your judgment. In Punjabi or Hindi even, there is a proverb, कोई बात नहीं देखी जाएगी, क्या होगा, जैसा घाटा ही हो जाएगा. And that देखी जाएगी is sometimes a wrong approach to have in stock market sojourn. People have panicked and sold their investments during weird phase. कोविड में मार्केट्स क्यों क्रैश करी? कोविड आ गया, दुनिया खत्म हो जानी है. आई एम टॉकिंग मार्च अप्रैल 2020. कोविड आ गया, अब दुनिया खत्म, वायरस आ गया है. वो मूवीज देखी हुई थी लोगों ने, कंटेजन एंड ऑल दोस थिंग्स, जिन पे रॉबिन कुक के नॉवेल्स पे मूवी बनी है, और लगा कि ये सब स्प्रेड करेगा एंड everyone in the world would be finished. अरे अगर वर्ल्ड फिनिश भी हो रहा था तो आप पैसे तो साथ फिर भी नहीं लेके जाने वाले थे. सो बेच के क्या मिला? सो इतनी बुरी तरह करेक्शन हुई. अ फंड लाइक रिलायंस आल्सो, एज आई टोल्ड यू, केम डाउन टू 820 years. So people made a lot of money because almost all of those losses were recovered by December 2020, in 8 to 9 months itself. So patience is very important in this game of stock market, and no emotions should come in your way of any kind of decisions. So finally, a few quotes by Warren Buffett on earning. He said, never depend on a single income. Make investment to create a second source, and he always referred to compounding as a very strong source. And on spending, he said, if you buy things you do not need, sooner you will have to sell things that you need. For savings, the quote is world famous. Do not save what is left after spending, but spend what is left after saving. Then on taking a risk, he said, never test the depth of river with both the feet. On investment, about diversification, do not put all eggs in one basket. On expectations, honesty is very cheap gift. Is very expensive gift. Don't expect it from cheap people. So the carry home gyan for today is the lure of the big money keeps people in the loop. Stock market में बहुत पैसा है. Stock market में बहुत पैसा है, and stock market में पैसा इतना है कि we know that इसमें डाल दो तो लोगों के दिन दुगनी रात चौगनी हो जाएगी. Then intraday comes into picture. Then F&O, future and options, comes into picture. People shun their basic profession of dentistry to spend time in the market, which is a very, very wrong thing, I would say. It requires a lot of patience and discipline, a lot of research, a lot of good understanding of the market, the 6 factors that I mentioned, understanding about the research, about the market financials, about the volatility part, and add to this, of course, the volatility, which has left always made the investors in a state of confusion. किसी भी मॉल में चले जाओ ना, तो वहां पे एक एलिवेटर के साथ साथ स्टेयर केस है, तो उसके साथ साथ अलग से एक फायर एग्जिट होती है. एक पहली चीज सिखाई जाती है, डू नॉट पैनिक. लेकिन कुछ भी हो तो लोग पहली चीज वही करते हैं, पैनिक. इट इज ह्यूमन टेंडेंसी, easier said than done. So nobody knows whether to invest, hold, or sell in such a scenario, because you always cross the limits when you are doing it. If you have done such investments with your risk appetite, with your income which has, you can say, been surplus, और an identified target कि मेरी 10-15%, 20% इनकम ही इसमें डालनी है मैंने, तो यू विल बी स्टिल सेफ. यार मेरा 80, 85, 90 तो सेफ है ना, जीरो थोड़ा ना हो रहा है, मेरा थोड़ा कम जा रहा है, करेक्शन हो रहा है, नो प्रॉब्लम. दिस इज द टाइम फॉर मी टू बाय. इट इज अ सेल, इट इज अ ब्लैक फ्राइडे सेल, लेट मी बाय. वी डू द रिवर्स, पैनिक, बेच रहे, बेच दो. This is the reason people don't know when to hold, when to sell. So we need to constantly monitor. Tip number 6 was this only, but I have repeated this point for the carry home gyan, and keep affecting the desired things. If you can't do that, then stock investing is not for you. अगर अपने कमाए पैसे को मॉनिटर नहीं कर सकते हो तो कृपया मत करें. Better put your money in the safe or less risky instruments like an FD. Yes, मैं ही बोल रहा हूँ, जिसने आज से 500 बार बोला होगा कि FD में मत डालो. बट अगर आपके पास ऑप्शन नहीं है मॉनिटर करने की, टाइम ही नहीं है आपके पास मॉनिटर करने का टाइम नहीं है, पैसा फेंकने का टाइम है, आपके पास स्टॉक मार्केट को रीड करने का, अंडरस्टैंड करने का टाइम नहीं, हेयर से पे करना है, उससे अच्छा मत करो. There are ups and downs in the market. There will always be, and they keep on happening. But you keep these 8 or 9 rules in the, you can say, mind, and trade smartly, you'll be able to cross all the hurdles and have a happy investment journey. Happy investing, all of you. I hope today's session was a little bit helpful for you. So, moral of the whole story, giving you again 9 golden rules of investing from a different person. Never try to catch the bottom. Never buy when there is blood on the streets. Don't stand against FII, foreign institutional investor. If you're not sure to go with mutual funds, focus on both risk and return. Never invest money you will need right away because it is a holding thing. Never invest if you don't understand. Buy beaten down stocks, not beaten down companies. Never bet on losers over winners. So thank you so much for your patient hearing. This is my WhatsApp group where I announce the session, where I keep the other sessions as well. The 6th group is on. If you want to be added in a investment free group, please send me a message. I'll add you. This is my YouTube channel. As on 10th April, 450 videos are already there. If you're not yet a subscriber, go to YouTube, search Dr. Bhavdeep Puja, subscribe and hit the bell icon, because you'll get at least 3-4 videos every week from me. So this is my social media presence by my name only, Dr. Bhavdeep, Clubhouse, Insta, Facebook. Do send me your feedback if you find if you have found today's session good enough or even worthy enough. So thank you so much. Bookers and Big Bats both will be welcome in equal measure. Thank you so much once again. And I stop my share for questions or for acknowledging the visitors on my page where this session is happening live. Hello, Dr. Rajat. Hi, Dr. Ramchandra sir. Hello, Dr. Vrinda. Hello, Dr. Nimish. Hello, Dr. Ajay. Hello, Dr. SP Singh. Hello, Dr. Sunehra Nurani. Hello, Dr. Vidya Arvind. Hello, Dr. Manu. Hello, Manindrajeet. Hello, Dr. Amit Srivastava. Hello, Rajiv sir. Hello, Rajesh sir. Thank you, Dr. Ramchandra. So any questions, please feel free to shoot. I'm here for a couple of minutes. And otherwise, we meet on next Monday with episode number 17 of Miraculous Mondays or Management Mondays. Okay, guys. Bye-bye. Take care. Have a great weekend. It was a very tough day for me, traveling since 2 days, but still found a way out to do the session. And I'm glad that so many of you attended it live. Thank you so much. Bye-bye. Take care.